Key indices closed mixed on Wall Street as fears of the Fed hiking rates continues to pressure stocks. The Nasdaq corrects for the fourth straight session, the S&P 500 for the third, while the Dow closes with some minor gains. Asian markets are largely lower on weaker than expected Japanese GDP data and a weak handover from Wall Street. The GIFT Nifty, however, implies a slightly higher start for the Indian market. The oil rally pauses on a stronger dollar and expectations of a decline in demand. Brent holds below the $90 a barrel mark. And the RBI will review its imposition of the 10% incremental cash reserve ratio on banks today. A CNBC TV18 poll sees 50% participants expecting a reduction in the ICRR. 20% see it being entirely removed, while 30% of the participants expect it to be retained as is. Delhi gears up for the G20 summit. U.S. President Joe Biden is scheduled to land for the summit later this evening. Regulations of cryptocurrencies, new focus areas for multilateral development banks, and a common framework to tackle debt and climate change are likely to top the agenda. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we have for you on this final trading session of this week. So there's lots to, really watch for in terms of cues. We have that important ICRR decision by the Reserve Bank that, we will hear about later. We have the G20 summit over the weekend as well. So we're going to get to all of that in just a bit. But first up, let's take a look at the kind of global handover that we got. The US was, largely lower. We did see cuts come through on the Nasdaq as well as S&P. And on the back of that, you have most of the Asian markets which are trading with some cuts right now. I just want to point out that the Hong Kong market is shut right now. They've stopped trading on account of a rainstorm. But apart from that, all of the markets which are trading are seeing some cuts right now. So the Taiwanese index is down around 0.6%. There you have it on your screen, almost 100 points gone over there. Kospi is down around 0.4%. And across the board, it's not too bad, but you're definitely getting around 0.3 to 0.4% in terms of a cut for the Straits, Shanghai, as well as the Kospi market. So that's what's really happening across Asia. The GIFT Nifty will come up for you. It is indicating a minor green tick right now. So we're just around 17 points higher in trade. But remember, this is after that big up move that we saw in the final trading hour of yesterday. So, it'll be interesting to see how the market really moves from here and how the banks move. But let's talk about the US markets now, because Wall Street, like I was pointing out, ended yesterday's trading session quite mixed. So the Dow managed to eke out some gains, just around 0.2% higher there. Like I said, 57 points in the green. But the S&P 500 fell around 0.3%. And the tech-heavy Nasdaq was once again where we saw a lot of the pain come through. It was over 120 points in the red as we winded down the trading session. This is in fact the fourth straight day that we've seen, that where we have seen the Nasdaq under pressure, and there are sort of renewed fears over the rate hike. So we have CNBC's Pippa Stevens, who's with us now to bring us a wrap of all of the action that really played out on Wall Street yesterday. Pippa.
A mixed day in U.S. markets as concerns mounted over the Fed's plan on interest rates for the rest of the year. The Dow added 58 points, but the S&P 500 fell 14 points. And the tech-heavy Nasdaq on a four-day losing streak, down 124 points. Apple shares fell in almost 3% after reports surfaced suggesting that Chinese government workers may be banned from using iPhones. The drop followed Wednesday's 4% decline. The Wall Street Journal reported that China ordered agencies not to bring iPhones to work. Now, it isn't clear if the ban is being issued widely. China is the company's third largest market, accounting for 18% of the total revenue. General Motors proposed its largest wage increase in decades as part of the latest negotiations with United Auto Workers. The union's president called the four-year pay raise offer insulting, saying it fell short of the union's requests, which include a 40% hourly pay increase and a reduced work week. Contracts for approximately 150,000 workers from GM, Ford, and Stellantis expire September 14th. That's what's happening here in the U.S. Back to you in Mumbai.
All right, so that is all of the action that played out on Wall Street. Thanks a lot for getting us all of those important cues. But, like we were just talking about, concerns over the Fed tightening its monetary policy have resurfaced. So let's listen in to what James Bullard, the former president of the Federal Reserve Bank of St. Louis, expects from the Fed in the light of the recent economic data. Hear him out.
The risks for the market are that the numbers on the economy look like they're going to be stronger, certainly than they were anticipated to be in the first half of this year after SVB. And now you're going to probably get some inflation numbers that aren't going to be as soft as people were anticipating. That's raising the risk that the Fed will have to follow through on its promised rate increase sometime in the next couple of meetings. And there's some risk that they'd have to go a little bit higher even from there if the scenario unwinds on them in a way that makes inflation stall out.
All right, that is the word coming in from James Bullard on how he thinks the Fed could move from here on. But let's also bring you some important market opinion. This comes in from Gabriela Santos of JP Morgan Asset Management.
In terms of our macro view, it's actually improved significantly since the end of May. And we now think the probability is higher for a soft landing. We've also gotten much better earnings data, and actually earnings estimates have moved up 4 percentage points. That doesn't neatly translate into a buy U.S. large cap stocks view because of valuations.
All right, that is some important opinion coming in. But with that, let's move on and talk about our own markets, all of the cues that you should watch and the individual stocks as well. We have Ekta, Vivek as well as Nigel joining us now with the trade setup. I'm sorry, Ekta, Surbhi and Nigel are joining us now. Guys, a very good morning to all of you. Ekta, let me come to you first. We saw that complete wild last hour sort of situation for our own markets yesterday, but take us through what we should watch today.
Thanks for that. Well, in fact, 2 consecutive days where we've seen a last hour surge for our markets, and we had that yesterday as well, where the markets did close at an over 1 month high. The mid-cap index posted yet another record close. We had the Nifty Bank, which gained around 460 points plus, and the likes of Larsen and Toubro, which surged to record highs as well. Now, the markets have shrugged off concerns with regards to higher crude prices, FII outflows, higher global treasury yields as well. Now, this morning, we wake up to cues where the US markets closed mixed. We have Asia, which is weak. The Japan GDP was lower than estimates. Hong Kong is closed for the first session on account of a storm. We have Brent crude, which has corrected a little bit, so it's below $90 per barrel. All this will probably bode well for us, and the GIFT Nifty is indicating a positive start. We have the FII outflow, which was lower as well, 758 odd crores, and DII's net bought around 28.1 crores. Just want to put it into perspective that FIIs have already sold more than $1 billion this week itself, but they sold less than what they have sold in the previous 3 trading sessions, which were on an average of around 2,700 odd crores. Now, in terms of cues, we do have the G20 summit, which kicks off today. So that will be the most important to watch out for in terms of sentiment, what we could expect in terms of an overall view coming in from Delhi. Also, we have the RBI review of the ICRR, the incremental cash reserve ratio. CNBC TV18 poll indicates 50% see RBI reducing the ICRR to 5%, 20% see it being fully removed, 30% see it entirely retained.
All right, Ekta, thanks a lot. That is going to be a big cue for us to all watch for. But with that, let's also talk about the individual stocks that are in focus. Surbhi is here with the entire list of stock-specific news that really came through. Surbhi.
Thanks so much for that. So the first one is Landmark Cars. The company signs a letter of intent with M&M for opening dealerships in West Bengal. Sterlite Tech, the company partners with True Vista to drive growth and enhancement of South Carolina's rural connectivity infra. Massgaon Dock, the company signs a master ship repair agreement with the US government. Campus Activewear, the Piyush Singh resigns as the Chief Operating Officer. JB Chemicals, Lakshay Kataria resigns as the CFO of the company with effect from November 30th, 2023. And lastly, TV18 will also be on our radar. Viacom 18 got the media rights for ISL for the next 2 seasons.
All right, Surbhi, thanks a lot for that entire list of stocks. Let's also talk about how things are looking on the future side. So Nigel is here with all of the cues. Nigel, it's been a good week so far for our own markets, but take us through what we should watch.
Well, that's right. It's been a good week, Pavitra, and who would have thought with elevated crude oil prices, the higher US yields as well, and the stronger dollar. But this market refuses to buckle down. And I made this point a couple of days ago that the Nifty Bank has been underperforming, but maybe its time has come, provided it holds on to lower levels. And if you look at the intraday chart yesterday, both the Nifty Bank as well as the Nifty ended higher, and that was courtesy the Nifty Bank. And in terms of open interest, well, we saw a fair bit of shedding. So that's the reason why, in fact, we did see that the Nifty ended higher. A couple of cautious points that are coming in there. You had the Nifty ended higher, but the India VIX was mildly higher. But I don't think it's a big cause of concern because, in fact, we're seeing that the India VIX is trading at historic low levels. So that's why a bit of a bounce out there. The other factor we look at is the PCR. The PCR has moved to around 1.4 odd, so it's moving towards the higher end of the band. Remember, the band has been 0.7 on the downside to around 1.5 odd. But I think going by the kind of momentum we've seen on the index, well, I think you'll have to ignore both these two cautious points and continue to remain net long on the index. What do the FIs do? Well, they added close to around 9,000 long contracts. They covered close to 8,000 short contracts. So the swing factor out there is close to around 17,000 contracts. So just going by that. And the long positioning now has gone to around 57%. The long positioning, it's the highest we have seen in the last few months. So just keep an eye out on that. On the strikes, well, the 19,600 put, that was fairly active. The premium was there roughly around 50 rupees. And it seems, the bullish sentiment is prevailing because some out-of-the-money call buying is happening. 20,000 is what the bulls want. And that's why, in fact, we did see some bit of buying out there. Which brings us to the level. Since the 19,600 put was getting written, well, on the downside, we're looking at around 19,550. The 50 DMA as well comes in at around 19,500. So that's a crucial support zone. On the Nifty Bank as well, we'll have to keep an eye out there because it's been doing quite well. I think on the upside, 45,100, that's the important mark. That's the near-term resistance zone. While on the downside, it's defended the recent lows out there. For starters, the GIFT Nifty was suggesting a bit of a positive start, 20 points higher. So I think you need to continue to buy the dip and continue to ride on the long side. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. That is how the setup is looking this morning as we get into this trading session. But with that, we are going to get into our first break on the show. On the other side, like we've been telling you, the prep work is underway for the G20 summit that begins tomorrow. So we're going to bring you all of the updates on that front when we come back. Welcome back. You're still tuned into Power Breakfast. Now let's talk about the G20 summit, which is going to start this weekend. And the stage is all set in New Delhi and this is the first one under India's presidency. So leaders from the world's most powerful nations will be flying down to Delhi for the two-day summit over the weekend. These nations represent around 85% of the world's GDP. So from new murals to statues to fountains, Delhi has undergone a major makeover, and several traffic restrictions are also in place to enable movement of VVIPs during the summit, and as well as all the premier hotels in the city have also been booked out for the weekend. But sticking with the G20 summit, like we were talking about earlier, this will take place at the state-of-the-art Bharat Mandapam Convention Center. An AI-based avatar will welcome high-profile visitors with a brief introduction to India's democratic roots. And apart from separate zones showcasing India's tech prowess, exhibits on India's rich, diverse tradition will also be featured here. So here's a sneak peek at that.
Thousands of delegates, 43 delegations, and 25 heads of states. India is pulling out all stops to manifest Indian culture and heritage. One of the first sites to greet the visitors will be the 27 feet tall, 18-ton Nataraja sculpture made of Ashtadhatu, an alloy of 8 metals including gold, silver, and copper. Nataraja sculpture is flanked by a grand staircase leading into the Bharat Mandapam. The 2,700 crore Mandapam borrows inspiration from a Shankar and is designed to showcase Indian culture. This will be ground zero for the summit. G20 leaders and accompanying delegates will be engaging each other across the auditoriums, lounges, and business centers. In fact, its multi-purpose hall has a seating capacity of 7,000. That's more than the Sydney Opera House. Ministry of Electronics and IT has also set up 2 Digital India Experience Zones. The zones will feature rock stars of India's digital public infrastructure, the likes of Aadhaar, UPI, DigiLocker, Bhashini, and ONDC. Leaders and delegates will be able to experience making digital payments, real-time speech-to-speech translation, and even get a medical prescription through online consultation. The government has expressed confidence that such immersive experiences will help project and build India's leadership in digital infrastructure. Hall 3 will see the RBI Pavilion. The pavilion will share with delegates the RBI pilot on digital rupee. The RBI will also showcase how digital credit can revolutionize rural credit. The pavilion will also feature the rockstar UPI. RBI will showcase that even delegates without Indian bank accounts can transfer money with ease. Contactless payments, RuPay on the go, and cross-border billing system will also be showcased. The Culture Ministry will host the exhibition called Bharat, the Mother of Democracy. An AI-based avatar will welcome the high-profile visitors with a brief introduction to India's democratic roots. It will feature 26 interactive panels that will trace the roots of democracy from the Rig Vedas to King Ashoka to modern elections. India also wants the high-power delegates to go back home with a piece of Indian culture. Kolhapuri chappals to Paithani saris from Maharashtra. So with the aim of one district, one product, the Mandapam will host a crafts bazaar. It will see products by women and tribal artisans from 30 states and union territories. In New Delhi, Ashmit Kumar.
All right, that is a slice of the very interesting G20 experience for all of you. Remember, we're going to keep bringing you updates on this through the day and, of course, through the weekend as well, so you can catch all of the action right here. But for now, we do need to get into a short break. On the other side, we're tracking all of the cues from the commodity market, so stay with us. Welcome back. You're still tuned into Power Breakfast. So let's now talk about all of the commodity market action. We have Manisha joining us. Manisha, take us through everything that really happened overnight. There is a little bit of a breather, at least, in the crude oil rally.
Oh, well, absolutely, and much needed as well. But even with that, it's a second straight week of gains coming in for the crude oil prices. We have seen prices hold above $90 a barrel, even with a bit of a profit taking that we saw yesterday. Well, the latest trigger comes in from the U.S. crude inventories. Markets have seen a decline of 6.3 million barrels in the previous week. In any case, the prices have been surging with what Russia and Saudi Arabia have done in sense of output cuts. Add to that the fact that the crude imports into China for the month of August also gained about 30% on a month-on-month basis. So markets are looking at a stronger demand going forward, and even as it is overbought on charts, Street does believe that we could be looking at these levels sustaining for some time. What we also have seen a bit of a rebound come back is in case of gold, silver and metal prices. The economic data from China overnight yesterday has been on the stronger side. Also, there is a CME Fed Watch tool which suggests 93% chance of Fed leaving rates unchanged in the month of September. That has been supportive for many of these metals. So whether it's gold, copper, zinc, these metals are headed for a weekly gain for this one.
All right, Manisha, thanks a lot for getting us all of those details on the commodity market action. With that, we're going to wind down in this edition of Power Breakfast with the news that all Asian markets are in the red right now. The Nikkei market has slipped even more on that weaker than expected data that did come out. It's down over 1% right now. And the GIFT Nifty is implying a little bit of a green tick for our own market. So let's see how the trading session pans out. Thanks for tuning into Power Breakfast. We have Bazaar Morning Call after this short break.